Every quarter, super investors release their latest portfolio where we can see both their buys and their sells from the latest quarter. Now today we've gone through some of the biggest names. We have Terry Smith, we have Warren Buffett from Berkshire Hathaway, we have Chuck Ackrey. We're talking some very well-known people in the space, and we've looked through their top 10 that they have started to sell, and we want to run through each one, discuss what we believe. We will also take a look at them in terms of our valuation. We'll talk about our own intrinsic value, what Wall Street see, and whether or not we agree and in fact believe that we should be looking to sell these in our own portfolio. Now the first one is Visa, where we get a double buy from Seeking Alpha and Wall Street with a hold from Quant. This one is trading in the midpoint of the 52-week range with a yield of around 0.8% and a forward P that sits at 26. Bear in mind S&P right now around 23. Over the last year, it is up around 9%. Over the last 10 years, significantly outperforming the S&P, up 391%. Now, when we take a look at Visa, our intrinsic value of $323 is significantly higher than the current trading price. Now, how we got this, we use the two valuation methods for Visa today, and when we do our deep dives, we do run through each model and also talk about the inputs and outputs. Getting straight to it though, we always add a margin of safety on this channel, 10% the bare minimum, where we execute if it meets our three golden criteria: wide moat, strong financial metrics, and good forward-looking data. Well, if you believe that in today's episode, a buy at $291, then we keep going till it's near the current trading price, not at a 20% MOS level just yet, but it does sit somewhere right now between 15 to 20%. With Wall Street liking this company, they did give it a buy rating, $316 price target, and they also see 20% upside. Now, we also agree with Wall Street as well. From what you can see of our valuation, we do believe that Visa is a buy, and in fact, not too long ago, we did release a video where we did add this to the portfolio, a high quality company at a fairly good valuation. The second stock that has been sold by super investors, in fact, this one was from Warren Buffett, is Snowflake, where we can see Wall Street giving this a buy, Seeking Alpha and Quant giving this a hold. It does currently trade towards the lower end of the 52-week range with an astronomical forward P of 203 and doesn't currently pay any dividends. Over the last year, it is down around 17%, and when we run this through our own valuation model, our intrinsic value of $161 is significantly lower than Wall Street of $201, whereas we can see very bullish, they have upside of 57%. Now, how we got to 161? Well, we ran it through the DCF model, where we have the free cash flow over the last few years. Now, average growth does look very high at just under 80%, and for the model we have used 20%. Now, bear in mind we have a low, medium and high, 15, 20 and 25, and with the 20% it does give us that intrinsic value of 161, which ultimately deems there to be 26% upside. Now, these numbers are very subjective, and you can always grab a copy of this model by clicking on the pinned comment below to run your own numbers through as well, whether it's for Snowflake or any others. But for full transparency, for those that do believe 15% is more appropriate, well, as we can see, 117 indicating right now downside of 8%, and for those that believe that is way too conservative at 25%, $222 indicating 74% upside. Now, ultimately, we are going to take through the median rate of 20%, and as we said, 161, that is lower than Wall Street, so they do believe it will grow at a much quicker rate. And with our margin of safety at 10%, a buy at 145, at 15% around 137, and at 20% pretty much at the current value today. So 20% MOS, upside of 57%, maybe you could argue this is one that you wouldn't sell and maybe add more to. But as always, give us your thoughts in the comments below as we do move along today. Now, before we move on to the next stock, just to let you know, we have released our latest free weekly article. If you want access to this or any others, it is completely free. You can click on the pinned comment below to sign up and read. And we have also released our 35 undervalued stocks for the month of August for your consideration, where we also talk about those that we hold in our own portfolio and the ones we are also looking to add. So do check that out by clicking on the pinned comment below. The third stock we have is Mastercard, that has been sold, where we get a double buy signal and a hold from Quant. This one is trading on the upper end of the 52-week range with a forward yield of 0.57% and a forward P that sits at 32, significantly higher than one of the competitors, Visa. Now, over the last year, it is up around 17%. Over the last 10 years, another one that has significantly outperformed the S&P, up 510%. Now, our intrinsic value of $530, pretty much spot on what Wall Street see in terms of a price target over the next 12 months. They see upside of 14%. Now, in terms of an MOS, well, at 10%, a buy at 477. At 15%, not quite there yet at 451. So you could argue sitting somewhere between the 10 to 15% point, with upside around a similar range of 14%. As always though, do let us know. A lot of people do prefer this to Visa. However, as I did already mention, Visa was one that I did add to due to the fact I did believe the valuation was a lot more attractive than Mastercard in the current economic climate. Then we move on to Chipotle Mexican Grill, where Bill Ackman has reduced his stake in this company. We have a 1 buy rating from Wall Street, a double hold. In fact, we covered this just a few days ago where it did drop due to the fact the CEO is moving across from CMG to Starbucks, and we can now see it is trading in the midpoint of the 52-week range. A fairly high forward PE in my opinion at above 47, around 44% upside over the last 12 months, and over the last 10 years, again, similar to the previous companies, outperforming the S&P up 293%. Well, we covered this in detail, so check that out if you want to understand this in more depth. But $56 is our intrinsic value. Interestingly, much lower than Wall Street. Their price target $64. They see upside of 21%. And in today's episode, there is no 10%, that minimum we want to see. In fact, you would only be getting a 5% margin of safety if you were to buy this now. As always though, maybe you agree, maybe you don't. Give us your thoughts and whether or not you believe Bill Ackman is making the right decision by reducing his stake. This then takes us on to the Walt Disney Company, where Nelson Peltz has reduced his stake. We have a double buy rating with a hold from Quant. In fact, it is also trading right there towards its 52-week low with a yield of just over 1% and a forward P of 17.4. Pretty much flat over the last 12 months. Over the last 10 years, we can see negative 2%. In fact, all-time highs do sit March 2021 at around $200, and we can see right now it is trading in fact below half of that price. So in terms of the valuation for Disney, our intrinsic value of 124 does mean that there will be a very nice MOS level. At 10%, a buy at 111, at 20% around $99, at 30% not too far off, $1 shy, so you could argue right now 30% MOS for Walt Disney, with upside from Wall Street looking very good, 44%, $127 over the next year. For me, this is one that is starting to look attractive if we can see over the next few quarters some very strong performances, so I will be keeping my eye closely on this company. We then move on to Meta Platforms, where we have a strong buy from Wall Street, a buy from Seeking Alpha, and a hold from Quant, pretty much trading near enough its all-time high. It has a forward yield, although fairly trivial, at 0.38%, a forward P around 24.9, one of the cheaper valued companies in the Mag 7 alongside Google, and it's up around 76% over the last year. Over the last 10 years, no surprise, up 622%, significant outperformance, and we can see some investors would have bought this right at the bottom at $91 in October 2022. Now, Meta's valuation, we pretty much see the intrinsic value at 567. Wall Street see it a little bit lower. They fairly see minimal upside, which is interesting given they do call this a strong buy. And we can see no 10% MOS level in today's episode, and in fact sitting right now at a 5%. Some people will be happy with a smaller margin of safety for what they do deem to be more premium, high quality companies. For example, Meta could fit that bracket, but as always, different investors will have different investment theses. We then move on to Lowe's, another one that is being heavily sold with 1 buy rating from Wall Street and a double hold. It trades in the mid to upper end of the 52-week range with a yield just below 2%, a forward P of 19.5, and up only 6% over the last year. Over the last 10 years, again, very strong performance, up 355%. As always, if you do enjoy the content, value is being provided. Smash that like button, hit that subscribe and bell button so you are continually notified of these videos as they drop. And our intrinsic value of 265, when we do give it a 10% MOS, does mean it's pretty much a buy at this level, although for us this isn't one we would be looking at such a small margin of safety. For example, at 15% a buy at 226, at 20 around 212, and around 25% is probably where we may start to consider this around the $199-200 mark. So in conclusion, 10% MOS with Wall Street indicating single-digit upside of 7% 255 price target. Eighth one in our list is Salesforce with a double buy from Seeking Alpha and Wall Street, a hold from Quant, trading bang in its 52-week middle, and we can see a yield fairly trivial again, 0.63%, a forward P just below 26, and over the last year, nice performance, up 23%. This one did hit its 52-week low not too long ago, and over the last 10 years, very strong, up 336%. Now, our valuation does give an intrinsic value that we see higher than Wall Street. There's around $298, upside of 14%, but we do believe the intrinsic value does sit higher, and with a 10% margin of safety, a buy at 290 at 20%, not too far off, not quite there yet, sits somewhere between the 15 to 20% mark for Salesforce. The ninth one, we have Dominos Pizza, where we only get one buy rating, and that is from Wall Street. It does trade in the midpoint of the 52-week range with a yield of 1.4% and a forward P of 27.4. Over the last year, up 12%. Over the last 10 years, up 502%. One of the best we have seen today. And we do note all-time highs sitting at the back end of 2021 at $564. Now, the valuation of 454, what this ultimately means is that we do believe it's currently trading around its fair value, although Wall Street, on the other hand, a little bit of a different result. 514 is their price target, 15% upside over the next 12 months, and a 10% margin of safety, if you wanted to see, would be around 409, 15% around 385, and when we do take a look at 20%, around 363. That brings us on to the final one, which is S&P Global Inc., where we get, in fact, a strong buy from Wall Street, a buy from Seeking Alpha, and a hold from Quant. This one trades right there at the upper end of the 52-week range, in fact, not too far off its all-time high. Another yield which is fairly small at 0.74%, and a forward P of 33.74. Up 27% to outperform the S&P over the last 12 months. Over the last 10 years, again, the same result, up 525%. Now, our intrinsic value, very similar to Domino's Pizza, trading not far off its current price, so we do see SPGI as one that is right there at its fair value currently. Wall Street, not too far off. Their price target of 509 is giving upside of 3%. Definitely one that we wouldn't say is a buy right now. At a 10% margin of safety, a buy around 449, at 15% around 424, at 20% around $399. As always though, if you do enjoy the content, value is being provided, smash that like button, hit that subscribe and bell button, and don't forget to sign up to the free weekly newsletter by clicking on the pinned comment below, as well as joining us in the Patreon if you do want to run through our weekly buys and sells. As always, hope you enjoyed the episode, have a great day, and we'll see you all on the next one.